Hi, welcome to my financial markets recap for the week. It's John Bannon here at common-tech.com. Before we get to the news, update on the system itself, how we're doing here. We're still long the market. I'd mentioned last week we were expecting a new all-time high in very soon, and we got one this week. It was fairly short-lived in the S&P 500, but we did actually get there. We got a new all-time high, and it's continued to be a really wild ride in the markets, thanks to the fear around the Omicron variant and its impact on the economy, its potential impact on the economy. Lots of fear out there around this stuff. We remain long. We're still expecting the Santa rally, hopefully starting next week. I think today was probably at or near a low, but I can be wrong, obviously. So I'm expecting another Santa rally, and we're in this trade for a bit longer. So hopefully it goes well for us, and more on that next week. So that was the system update. Here, what's happened in the news this week. Obviously, the news wires are very sensitive to the new variant. I'm not going to focus too much on COVID-19. It's pretty obvious what's going on out there. Everyone is well aware of it. So first up, in terms of other news around the markets, was the Fed. That was really the big news for the markets. It was just about the markets really this week, and that was the Fed's meeting in December there, and it concluded on Wednesday. And Chief Jerome Powell said that the U.S. Central Bank plans to slash its economy-boosting bond purchases. It's doubling the scale in terms of what it was doing before. It was pulling back 15 billion, now it's pulling back 30 billion. That puts the Fed on track to end the bond splurge it's been doing in March rather than June. So, meaning interest rates could be rising as early as spring. So we'll have to keep an eye on that. In March, the Fed wasn't even expecting to be raising rates at all until 2024. So this is a definite change in policy, obviously, and now they're expecting to raise the hike at 3 times next year, which is a big change from what they were saying last year. So things are heating up in the economy. Powell's called the inflation transitionary in the past until this month, when he's officially retired the term. So prices are soaring faster than expected, with inflation at 39-year highs. So it's become a problem for them. The solution is higher interest rates make borrowing more expensive, extra IOU payments to discourage spending and encourage saving, which can help lower prices, and that's the plan. The reaction is the stock market actually jumped on the announcement from Powell. We got an all-time high shortly after that, and this was really his inflation control plan. It really reduced the uncertainty around what the Fed was going to do, because it's like sell the rumor, buy the news kind of thing that happened, and it really relaxed price fears. So the market did actually like this news, and it pumped up. The Fed really was under pressure to act because the consumer prices, as I said, rose for the fastest pace in 39 years in November, and it wasn't just volatile goods like food and energy. It was all across the economy basically. Rents, home furniture, all rising at a concerning amount, according to the Fed. Producer prices gained the fastest pace on record this week. Higher prices paid by producers often trickle down to our wallets, the consumers' wallets, so that's one of the concerns here. Although at the same time, the jobs numbers are good. They've been strong, and unemployment rate is down to 4.2%, which is the lowest level since the pandemic began. So it is trending lower. So Powell said we are making rapid progress towards maximum employment, which is one of their key mandates. So they were quite happy with how they projected that was going, and they had a lot of questions after their statement around this key metric. They were really sort of pummeled with questions around the employment rate, but they seem quite confident they're near that, and they'll be looking to raise interest rates next year. In other news, Apple is close to becoming the world's first $3 trillion company, as investors eye new investments into VR and the iCar. Speaking of the iCar, Apple's long-rumoured self-driving car project has hit a lot of roadblocks, pun intended, but it's reportedly finally on track to be making their first car by 2025, so it's not that far away. and Apple will be a big player, as they always are. Any market they ever go into, they'll do well in it, I'm sure. So that'll be well anticipated. It took Apple almost 40 years to reach its first $1 trillion, and then it took only 2 more years after that and that was 2018, and it took maybe less than 2 years after that to reach $2 trillion. Now it's 16 months later, and it's almost a $3 trillion company because of its strong sales in China. Almost happened this week. Perhaps they'll reach that goal next week if we have a rally in the broader market like we expect. So we will see if Apple reaches its 3 trillion. If Apple reaches its 3 trillion, then we've done pretty well. So let's hope that's the case. In Bitcoin news, it was reported that 90% of all Bitcoins have now been mined, but the remaining 10% will actually take over 100 years to reach the open market. So the calculations are getting more challenging for the computers, and using much more energy to mine those coins, because there's not that many left. Also, a Cornell professor was interviewed on CNBC this week saying that the future may not actually include Bitcoin. He said that although the blockchain is the underlying technology behind cryptocurrencies, it is essentially a digital ledger of virtual currency transactions, which is distributed across a global range of network computers. And Bitcoin's use of this blockchain technology is not very efficient, he said, because Bitcoin uses this validation mechanism for transactions that is environmentally destructive and doesn't scale up very well. And he said Bitcoin's carbon footprint is so big, it's bigger than the whole of New Zealand. I've mentioned this before, and I'm sure you've seen some stuff on the news in terms of Bitcoin and its use of, its carbon footprint is gigantic, and that's not going to be. And he was saying that Bitcoin itself the original Bitcoin is not very efficient in how it actually deals with these transactions, and he suggests there's other newer cryptocurrencies that are coming out that are using the blockchain much more efficiently and may actually overtake Bitcoin. And that will potentially include governments around the world learning the mistakes of Bitcoin and introducing their own cryptocurrencies that they can actually regulate, because the Fed mentioned yesterday, Jerome Powell, on one of those questions, he was asked about Bitcoin directly, and again he brought up the fact that it's not regulated and it's a speculative market, and until it's regulated he doesn't really want to talk about it, right? So he's just saying people watch out. So very interesting. And speaking of interesting, here's a very interesting fact. It was revealed this week that Vladimir Putin, one of the most powerful leaders in the world, moonlighted as a taxi driver after the Soviet Union collapse. A true rags to absolute power story. So, he's been in the news quite a lot recently around this Ukrainian thing. I've seen just a flash in the news before I started talking here that he's set some boundaries for the Ukraine and the West to play ball with them. That is a liquid situation. We'll see how that goes, but hopefully that's not going to be a big news story for us. But that's it from me. It's the weekend. Time to down tools. Have a great weekend, everyone. Thanks for watching, and bye for now.